Well, hello again, everyone, and welcome to our latest market report. Dion Zikuski, Branch Manager and Director of Scotia Wealth, here with you again. And as we head towards summer, we wanted to share a couple ideas with you today. We're going to look at everything from market rubber band effects, crystal balls, and even what some of my associates' favorite summer drinks are. So since our last video, markets continue to push higher as everything adjusts from pandemic mode to reopening mode. And with governments around the world in various stages of reopening, hopes of some type of normalcy are coming back. People are getting on the move, and speaking of on the move, people are slowly getting back out there and spending money. This is really important because here in North America, close to 70% of GDP growth, of economic growth, is tied to consumer spending. To the end of May and early June, let's check out the uptick in restaurant bookings and use of public transit. So for restaurant bookings, we can see they basically fell off a cliff in March as nobody wanted to eat out anymore for obvious reasons. But we've seen a big uptick here in May and June. Germany, for some reason, really had to get back to restaurants, and you can see that their uptick was more significant. Looking at public transit demand, most major cities around the world are also seeing a move higher, and we expect that to continue. So perhaps overall we're starting to see a rubber band effect in the economy and the markets where things had stretched so far to the downside that they had to snap back somewhat. As we know, when things hit bottom, seeing an improvement isn't really too surprising. However, market indexes have scratched and clawed their way back the last couple months to the point where, as of this recording, the Canadian TSX is down about 8 to 9% year to date, but the US S&P 500 index is only down about 4 to 5. Moving forward, there will likely continue to be uneven parts of the market too. We have seen some sectors such as technology, which is a favorite in our Zook Group models right now, as well as healthcare, should continue to outperform, whereas other sectors like energy and financials may struggle for the next few quarters. So the big question we're often asked is, will the recovery continue? And we try and dust off our crystal ball, and I'm absolutely floored at how many experts there are out there right now. Bond and I did a Google search of summer 2020 stock market predictions, and guess what? It gave us 13 million results. Amazing. But our top strategists here at Scotia, along with our friends at the Global Portfolio Advisory Group, believe the recovery is a good sign, but there are still risks out there. It's true that we have seen activity pick up, along with employment data, which hasn't been as bad as expected. As we mentioned in our previous video, the markets overall seem to be looking past 2020 and into a major global economic recovery in 2021. On the flip side, assuming there is a second wave of COVID, how much of an impact will that have on the economy? To be honest, this is crystal ball stuff, and nobody truly knows. How about this high-tech chart we came across from the Organization of Economic Cooperation and Development, which is a global economic think tank based in France. Looking at the chart, they looked at linear growth for the next couple years, which is the red line. Obviously, that's not going to happen because of COVID. So the big drop-off came in March. We've seen some recovery to that first point upwards, and that's where we are today. So will a double hit happen and we'll see another move lower, or will the V-shaped recovery continue on? Our team really believes that an economic recovery will probably take the form more of a W, not a pure V like the market seems to think at this point. It does seem likely, however, that if there is a second wave and it causes issues, we have to assume that governments and businesses will be better prepared and we won't see as much of a shock as we did a few months ago. So as far as strategy goes at this point, we have been comfortable in adding to more growth positions, albeit very selectively into quality positions at this time, but still exercising a level of caution because let's face it, markets are still a little bit fragile out there, and we need to wait for more firm footing later this year. I mean, at the end of the day, crystal ball stuff of quarter to quarter isn't even close to as important of having clearly defined investment goals. That's the biggest thing we need to keep in mind. And if you do have questions around that, please give us a call. It's our job to help. So finally, with summer coming around the corner, what are some of your Zook Group's favorite libations? We know you've been waiting for it, so here's some of our favorite drinks. See how our list compares to yours. I'm not afraid of a little beerita now and then, maybe some light beer and margarita mix, perhaps a rum and coke with lime. There's a great brewery in Red Deer called the Troubled Monk. My favorite is their Open Road Ale. Bond has his favorite from Troubled Monk being the Hip to Be Square IPA. You can see Bond is more of a beer fan, especially with the darker stuff. Adrian's a little more conservative, enjoying red wine and margaritas, but isn't afraid of the hard stuff with the odd rusty nail. So that wraps up our video for now. Our video updates will take a break over the summer months, but you can bet our team will still be hard at work here. We wish you a great summer. If you have questions, contact us anytime, and thanks for watching.